Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at the US oil market using the CFDs on crude oil for the WTI, the West Texas Intermediate. So, we've got a bullish count, which we've had for a long time now obviously, and we've got a bearish count which has recently been invalidated, so we're going to have to review our options there. So without further ado, let's get underway. So, this is the bullish count, and this has been what we've been expecting to play out from a bullish perspective the whole time, and it appears to be doing so thus far. We had a zigzag at primary wave 2. Here we have possibly completed a double combination at wave 4 here, 3 wave move in the W, 3 wave move in the X, 3 wave move in the Y. So we do have alternation. It's not the nicest kind of alternation where we get a zigzag and a flat pattern, or a zigzag and a triangle in a wave 4, but it is different. It looks, a double combination can often resemble a zigzag, but the sub-wave count is different, so we do have alternation there at primary degree. If we also look at our pitchfork for the primary degree pivot at 1 and the 2, we can see that it was quite a deep correction for the wave 4. We came right down to the bottom of the pitchfork here, which is fine. You know, we didn't breach the extreme outer bound. We breached the outer bound. We've worked our way back up, and so far we've come up to the 38.2, found resistance, down, up through the 38.2, down to the 61.8, and now we've found resistance at the median line here. We have yet to make a new closing high, and have yet to make a new intraday high. Got very, very close last week on the 28th of September, but just haven't quite done it yet. So, but coming to the median line, once you've established a pivot, this is like an 80% probability this will occur. So we haven't quite cleared the high. I would expect us to do so, since I now think we're in a primary wave 5. But this primary wave 5 could be very, very big, or it could be very, very small. This is the problem with wave 5s. They only have to clear the wave 3 to be legal, and even then they can complete before the wave 3 as a truncation, but that is very rare, and I don't think we're going to be dealing with that. So let's just take a couple of quick measurements here and just remind ourselves what we're looking at. So we take our low, project to find our 3. Our 3 falls just short of 100% parity. So what we've got to do here is we've got to be really precise, because if the 3 is shorter than the 1, then the wave 5 will have an upper limit. So we've got to be precise here. So let's just make sure we put this exactly where it should be. Okay. And then come up and have a look. We can see that the wave 3 did indeed fall short of parity with the wave 1. Now we have to bear in mind that we're coming up from 0, because we literally reached 0. So I've never encountered this situation before, so I honestly don't know how we would cope with the price, because obviously in real terms the price went into negative territory, went into negative figures. So from a point of view of having traded negatively, any move into positive is an infinite percentage increase. You literally can't measure it. So we've got an infinite percentage rally regarding the actual price contracts traded at on the futures market. So here for the CFD we come down to 0, and that's all we can do. Okay, we have to start at 0, and that's what we've done. And on this measurement, 3 has not made parity with 1. Interesting. So I think, given that's the only measurement we can make, we should stick with it. And therefore, by that logic, wave 5 cannot be longer than wave 3. So that still gives us a huge target though. So I don't think it's anything to worry about from a bullish point of view. It gives us a target all the way up here at 105.09. Now this isn't a magnet. It's not a target that's going to draw price up here. This is a limit. Okay, because we didn't see a longer wave 3 than a wave 1, this wave 5 will not go beyond this point. So we will stop any time between now and this target up here. So we'll just say wave 5 limit, right? primary 5 limit. There you go. So we won't go beyond the length of the wave 3 for the wave 5. Assuming that the logic I've applied here, which is the only logic we can apply, which is the chart measurement, is correct. It is what the chart says, so that's what I think we should go with. Now, regarding what we've done so far off of the low, having found our low here in the wave 4, I can't remember what we retraced here in the end. Let's have a quick look. So we pulled back between the 23.6 and the 38.2. If we just look at it in log, yeah, it's basically the same. Yeah, so we pulled back between the 38.2% retrace here, the primary 3, and the 23.6. Hang on, let me just pull this up because I can't look at those price targets in log unless I'm using the using the fib retrace tool. So let's just do that quickly. Yeah, we'd actually not have pulled back as far. I think it would probably be the 23.6 if we shift it into log. Roughly just breaking the 23.6, which is this red level here. So we went slightly beyond the 23.6 in log. We got a bit closer to the 38.2 in linear scale. So essentially a very typical wave 4 retracement. And having set up our pitchfork for this wave 1, wave 2, wave 3, wave 4, we got the overthrow here within the external correction of the B here, and what was an expanding flat for our intermediate wave 4. This is what I always like to see. I always like to see the peak of the momentum and a throw over in the 3 of the 3. And if we look here, bar the rally off the low, which I think we have to give the benefit of a doubt. It still occurred within a third wave though. This peak did. It was the 3 of the 1 here. We can see that the MACD of the 3 is a higher peak than all subsequent peaks. Here's the next peak, here's the next peak. And the same is true here also on the RSI. That we get, peak momentum. Unlike here where we actually do beat out the RSI in the wave 1, the 3 of the 3 is the highest peak in the RSI here. And we get this little throw over of the pitchfork. Which is, all of this is very synonymous of the wave 3 of the 3 because it's the greatest amount of market participation within the 5 wave move. So I've always liked that, and the fact that we've now come down to the bottom of this pitchfork and have now started rallying up to the median line, this is also pretty strong evidence that we've completed that wave 4. So I'm just going to put this into the bullish count. I'm going to take these targets off the board for a minute. So that's the bullish count. So far I'm counting it as a 1, 2 running flat. Now you could count it as a 2 here, but this seems to be a 3 wave move, and this seems to be a 3 wave move, and this counts as a 5 wave move on the smaller time frame. So I suspect that we might have a pretty it's not that rare, a running flat, but it can be quite confusing for a wave 2 because we end up with a low that's very close to the high, and it's not something most people would think about. Now I'm also perfectly happy to put the 2 down here and say that this is a 1, and this is a 2, and we're building an extension in the 3. So we've gone 1, 2, 1, 2, 1, 2, and then now we'll come up and minute 3, 4, 5, minor 3, 4, 5, primary 5. That's a very bullish interpretation. Okay, that suggests that we're going to get an extension in the 3rd wave of the primary 5 here. Okay, so in that regard, it would not be a pure 5th wave extension, because we would not be extending the 5th wave inside of the primary degree. We would just be extending the 3rd wave at minor degree of the 5th primary degree. We did not get an extension target for the primary wave 3 as we didn't make parity with the 1. So we should consider the possibility of a wave 5 extension. Some kind of blow off top occurring is a possibility. So now that we've considered the bullish case and we're counting our way up, I would expect to see resistance here at the median line. Whether or not we come down for a deeper correction, that would give us some clues as to what's going on. If we continue to push higher, that would be very bullish. So let's hide the bullish count now. Hide this pitchfork and bring up our old bearish count, which we were working on, which was that this was a cycle wave 1 peak. Okay, and we were going to come down into a cycle wave 2 peak. Low peak, what the hell am I talking about? Okay, so the way we were talking about this as a zigzag, 1, 2, 3, 4, 5, A, and then A, B, C, B, this is obviously incorrect now. Okay, so, and if we bring up our parallel channel here, we can see that we breached the channel and have almost made a new high. So, if we're going to give this count any validity at all, we have to treat this as a W, I think, or an A for a 3-wave move. We'd have to then consider this as a zigzag. So maybe this is 5 waves into here, A, B, and then 1, 2, 3, 4, 5. So perhaps an expansive B to a new high, and then a C in 5 waves to a new low. So it is still in play, because we had this 3-wave. If we'd had a 5-wave move here, right, then we would have expected to see a B complete before the high, and another 5-wave move down for a zigzag. Now we didn't get that, so we've either got a completed WXY here, or we've simply got an A, B, C 3-wave move into an A, right? And then we've got a retracement of at least 90%, which I think we have definitely got in this case. Let's just bring up my fib. Yeah, we've come up to the 90, so we've satisfied the potential for an expansive B wave, coming back 90%, and then 5-wave move down into a C. Okay, now in this case, this would definitely break that pitchfork that we were looking at. Okay, 100% would break it. We'd be way down outside of it, and that would very much look like the completion of a larger wave degree, wouldn't it? A 1 here and a 2 here, a complete break of this pitchfork, and therefore we would now be applying, this as our new pivot into a cycle wave 3, and price would rip higher, and God knows how high oil price is going to go. If this count is correct, it doesn't really matter. This is only bearish in the short term. It would mean a hell of a sell-off, but it would mean a hell of a rally afterwards. And the bullish count hasn't even completed cycle wave 1 yet of a new bull market, right? It hasn't even completed it. You understand what I'm saying? If this is the top up here, or anywhere between now and this target could be the wave 1, and then the 2, and then the 3. So oil price over the next decade has potential to easily break the previous highs at 140. Which is going to have a pretty big impact on the world, I think. Exactly what it is pricing in, no clue, to be honest. Is it massive industrial demand? Is it massive economic growth? Or is it just supply issues permanently which don't recover? Or is it inflation? Is that what we're observing? Are we observing inflation of commodities? Massive money printing, huge stimulus. It's all potentially there to push prices up. So take your pick. The chart says we're going higher long term, and that's that. So anyway, let's get back to, we turned off that bullish count. So we'll wrap up with the reconsidered bearish count then. So we have to have, if this is going to be correct, this is some kind of 3-wave pivot here. Coming to a chart near you, this is some kind of pivot. Okay, and if this is the case, then the retracements, I guess, for the wave B are really what we should be looking at. So let's mark those up before we leave. So 100s, 90s here already, we've come to that. So 123.6 to 131.8. We'll just call this a zone, and we'll mark it with the little blue line. And then also the 1618. I don't expect to see B waves expand beyond the 1618. They can, but if we're going to have a sensible cutoff, the 1618 is normally where we would look. So this zone here is a potential reversal zone, okay, for our wave B. So we'll just pop a couple of price targets up here, and then we'll stick all of this into its own little folder. Expanding flat B wave target. There we go. So there you go. If this bearish count is going to be correct, I would expect the price to come up into this territory and then reverse down for this C wave here, breaking the pitchfork, completing cycle wave 2 degree. However, I would argue, having seen a potential completed wave 4 already within the established pitchfork, I'm going to lean on the bullish side until proven otherwise. Okay, so I don't see any reason why not to. So let's wrap up with some basic technical analysis. So just to be clear, that doesn't mean that the bearish count is impossible. It could happen, but for the meantime, I'll be leaning on the side of the bulls at the moment with a completed correction. If I were to see this trend break and that pitchfork break and the move down in price, obviously, and the reversal here that began in a 5-wave move down, 3-wave move back, that would make me highly suspicious and much more likely to lean into the bearish case at that point. So, right, let's hide the count and the bearish count. Those two here need to go into the bearish folder. There we go. And let's bring up, shall we hide those first? Might be a better idea, yeah. That's a better target. Try clicking on the right button, Tom. There we go. Right, so let's bring up our moving averages. We'll come out to the weekly time frame for this to start. Let's bring up our momentum indicators as well. Okay. Right then. So on the weekly time frame, we have our 4 exponential moving averages here: 10 in yellow, 20 in blue, 60 in orange, 250 in green. We have our MACD set with a 10 for the signal and the 20 for the average, which is the blue and orange lines. And we have an RSI set to a 10 close with the green 30 level representing oversold and the red 70 level representing overbought. So what we can see here is we are having come through the 10 and the 20. We had no crossover of the moving averages. Huge bullish engulfing bar, massive bullish engulfing candle here, completely gobbling up the previous week's price action and rallying higher since. So strong bullish reversal here after breaking these moving averages. Didn't come down to the 60. 60 is now back above the 250. As I often point out, when we get these golden crosses, this is normally a signal to that a lot of traders, more amateur traders, tend to use as a reason to buy the market. But as I keep pointing out video after video, time after time, these big moving average crosses normally symbolize a high or a low, at least temporarily. You can see that after this golden cross, we are only 2 weeks out from a high. And then we have this huge correction. So if you'd brought on the golden cross thinking you were being clever, you'd then have to endure this big swing lower. It happens so often, it's unreal. So please always keep that in mind, that this is not a guarantee of immediately going higher. It's a positive for the longer term, but it's not a guarantee of immediate price action. Okay, it's often treated as a signal for people to take profit. And the same is true if we get a death cross. It's often followed by a temporary low, at least, very soon afterwards. Anyway, that's the weekly time frame. We've got a cross of the average over the signal here. Just a green bar appearing on the Instagram. A return to bullish momentum conditions here. The averages and the signal still well above the zero bound in positive territory. Looking to gain strength over the coming weeks as this rally develops. And then the RSI is out of neutral territory, back above the 60, not quite overbought yet. Obviously, the one thing which sticks out like a sore thumb since peaking in the wave 3 of the 3 here is this bearish divergence between previous highs in the MACD, previous highs in the RSI, and current price action, which is high, high, soon to be another high, I think. This is really normal behavior for a wave 5. So you tend to see momentum slack off after completing the wave 3, and then we can push up to a lower high in RSI and MACD readings in the 5th wave. So depending on how this wave structure develops, this long range it's not a target, it's a limit. This long range limit I don't think is a very likely place for the wave 5. I think clearing the wave 3 top is a given. I mean, it's not 100%, but I think given how close we are, clearing the wave 3 top for the 5 is highly likely. How far we go beyond that, I don't know. Okay, the wave 5 limit up here I think is extreme, a little too much, but I think that's because we rallied from 0 in the wave 1. You know, that's just skewing everything, having come all the way up from here. That's just skewing our targets a little bit. So I think perhaps be a little bit more conservative. But over the weekly time frame, I think watching for a touch of this trend, okay, watching for a touch of the MACD to come back up to this trend, and watching for a touch of the RSI to come back up to this trend, setting a potential lower high in the RSI, potential lower high in the MACD. If price continues to move 1, 2, 3, 4, 5, and we get into sync with a high, and a high, and a low, a high, lower high, lower high, same here, that would be very strong bearish divergence between previous highs and current price action, not actual divergence until we establish a high. And in that case, we'd be looking for reversal conditions in momentum on smaller time frames. We'd be looking for a bearish candle. We'd be looking for a breakdown of 5 waves to the downside and a retracement in 3. We'd be looking for all the signals we always look for to establish a reversal. Okay, so then we come down to the daily time frame here and see what we can see. So just keep that bearish divergence on the weekly time frame in mind. So we are above the 10, the 20, 60, 250. The 10 and the 20 did come down through the 60 exponential moving average. The 20 crossing through the 60 for the short-term def cross. Here's another example of what I was just talking about. We get a def cross of the 20 over the 60. Then 1, 2, 3 days later we bottom. And then we rally like buggery. So if you were looking at this as a bearish signal and then got in here, you'd only enjoy a couple of days of profit before you got walloped. It's not always the case, but it just happens so often that I think I keep having to stress it in my videos, not to rely on those kind of moving averaging crosses to give you any indication of momentum. You should look at momentum to indicate momentum. You should look at price action to indicate price action. Okay, so yeah, that's all I've got at the moment, guys. Let's see if we make a new high. Let's keep an eye on this long-term trend. We'll keep in mind the bearish possibility of a reversal because we haven't got the clearest of impulse waves here. It's either an extension because we've got overlapping, so it's either 1, 2, 1, 2, 1, 2, or it's a zigzag, and that explains the overlap. So yeah. We'll leave it there, guys. Hope you've enjoyed it. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. And as always, big thank you to my Patreon subscribers. Your support is greatly appreciated. If you're interested in joining the Patreon, it is the start of a new month and the perfect time to do it. So there's a link in the description below. Head over, have a read of the tiers, see if there's anything you're interested in, and feel free to sign up. Alright guys, take care and I'll be back with you shortly. All the best. Bye bye.